Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update. The date is the 2nd of the 2nd, 2023. We're going to be covering yesterday's events, and of course, the big one was the Federal Reserve's FOMC, where they chose to raise by 25 basis points, a quarter of a percent. And essentially, I thought Jerome Powell came out rather hawkish, but markets are largely ignoring this. And actually going into this and really, sort of pre-Christmas and certainly post-Christmas and from the start of January, we've taken this non-bearish approach to the markets. We've said the worst in terms of financial conditions are behind us, and markets are certainly treating it as if that's the case. Now, we aren't fortune tellers. We can't tell when there's going to be a crash. The yield curve is essentially saying that there is one, and it is impending. However, in terms of monetary conditions that are driven by interest rates, largely, the end is in sight. And actually, they may have one more 25 basis points in them. That's where I personally believe that they're going to get interest rates too. But this is going to, of course, depend on continuous data. And there's a lot that we can kind of look back on from yesterday's events, certainly in regards to what the dollar did, what crypto did. We'd actually said we were team Jim CRAMER for the first time ever. That's a first for me. And it felt very weird because he was essentially saying buy the dip. We did that essentially, despite, this rally is talk about a hated rally, because the vast majority of people are still sidelined. You'll get people out there that will say, oh, well, I'm not sidelined, but they're the same people that held all of last year, right? So we only put money back into the markets, certainly the cryptocurrency market, at the start of this year. Had a conversation with my Patreons, link in the description, on the 5th, acted accordingly moving forwards for the first time in a year. And it's been a great month, to be quite honest with you. And there's no reason why you guys can't do the exact same thing. But for a lot of people, they're getting their sort of information from the wrong individuals. You've got people that are, for me, the most important part about understanding where the cryptocurrency market is going is understanding the macro picture. It's what allowed us to take money off the table last year and preserve it. And it's what's made me put money back into the markets and be right thus far. Doesn't mean that we don't have a demand killing event coming down the line or something like that. But we've also hedged for that. If you understand this broad picture, you'll understand what's going on. And you've got to understand that markets are all driven from liquidity. Liquidity is largely dictated by the Federal Reserve and central banks that are in control of that liquidity around the world. And we've essentially stated that prior to all this, prior to the low CPI prints, that conditions looked a lot better. We have inflation coming down and we have rates coming to an end. And we actually did a study on the 2-year yields where we looked at this being the top. This precedes and leads the Fed funds rate. Okay. And you can see the Fed funds, the active Fed funds is at 4.3. And we're saying that we don't think it's going to get much above 4.8, 4.9. So maybe it goes to 5%. And if they did another 25 basis points, that would take us to 5%. And I largely think that it stops there unless there's reason for them to go higher. And I don't think they will. I don't think the Fed want rates. I mean, we've seen what happened with their debt ceiling and so on and so forth and the kind of pressure that it's bringing on. But the real sort of crux to understanding this and where it's going is understanding inflation. Now, inflation is trending down, okay? And some of Jerome's Powell's comments were, this was one, Fed Powell, for the first time, we can declare that deflationary process has begun. Slightly too early to say that, but you can see the ridicule that these comments are getting. People don't like change. And part of what I have to do as a market analyzer, a trader, and investor is consistently reassess my bias, reassess my positions based on what's happening around me. People are very inwards when it comes to investing and they don't like to look around them. You need to be observant. I made a big mistake in January and February and actually didn't get out the cryptocurrency market. And we're talking about when the bear market sort of started, the early stages of when the bear market started. And that was because I didn't pay attention to what was happening around me. I had my crypto blinkers on because I'm such a believer in this tech and where it's going, and I still am. But the game of investing moves are far more than fundamentals in terms of an individual crypto or company and so on and so forth. So it's all about rates. We don't think rates are going much higher. In the same manner that markets sold off because of rates going up, and we'll do this with the 30-day Fed Funds futures. We essentially, and you can see actually, we have said that we're looking at about 5%. Fed Funds futures actually isn't quite there. The euro dollars is, however, so the markets are kind of expecting it. So euro dollars may be a better one to use. But just for the purpose of what we're showing you here, because this is the most crucial thing to understand, forget you guys drawing triangles on 15 5-minute time frames. The majority of you are not day traders. These guys that are putting this content up there are content creators and they don't day trade. I know a lot of them, okay? I've actually spoken with some of them. I wouldn't trust them to order me a sandwich from a cafeteria where there was 3 things on the menu. It's just insanity, the kind of caliber or the lack of caliber of individuals out here that are talking about financial markets and make content. There are some amazing people out there also. So in the same way markets all adjusted for interest rate hikes, they're going to adjust for cuts. Now, cuts are being priced in for the end of this year, certainly 2024. That might line up nicely with the Bitcoin 4-year cycle theory and whatever. We can do another video on that. But it's all about rate hikes. And what Jerome Powell confirmed to markets yesterday more than anything was that they've got it about right in terms of where they think rates are going. It's the most important thing that you can understand. Yet, just understand that. If I can give you one thing here, it's that understand that markets are consistently and constantly pricing in monetary policy and conditions. And the conditions are dictated by interest rates. And ultimately, you need to understand that because then you'll be ahead of the curve like I've been and like my group's been. And people say, oh, well, you were still bullish, back in November 2021. Yeah. And we were out by a couple of months in terms of when we thought the bear market was going to, or when we actually positioned and got with a bear trend. But we saved a hell of a lot of money last year. We saved a hell of a lot of people money last year. We made a hell of a lot of people money going into 2021 and 2020. You got to remember, I've been here for 5 years, guys. A lot of the cryptos, when I first started investing in, even at the peak of the bear market, they're still up massively from. So we've been here a long time doing this, and certainly, I'm still here. So what Jerome Powell basically did, there was a few interesting things. He's saying that it's premature to declare victory against inflation. Remember, we've got the CPI stats coming out on the 14th of February, so not this week, not next, but the week after. I think it's a Tuesday. I believe I've got that correct. That's going to be massive. And actually, what we're looking at for Bitcoin, or what I'm looking at, is some sort of a reverse head and shoulders as a reversal pattern. We already have signs that the bear trend may be reversing. That's why we took a punt. Best time for me thus far that I've seen to take a punt on this. I still am looking for this sort of reverse head and shoulders setup. It would be nice. It would be very convenient for me. This could come on the sort of back end of dollar strength after the dollar's been getting an absolute beating. Remember today, guys, you still have the Bank of England, which will already have their rates out at this point, and the ECB, which will also have their rates out probably by the time you're watching this, or 15 minutes after this is released. So I do think the dollar is going to, this is the kind of forecast that we've given for the dollar. It either shows strength here or it shows strength a bit further down. You are going to get a pullback from the dollar's downtrend eventually. And that's going to correlate with risk going down in the same way that risk has gone up since the dollar's been going down. This is the S&P, not Bitcoin. Bitcoin didn't quite appreciate like the S&P and others because of its FTX sort of internal issues, we'll call it. They also said that they're expecting ongoing increases. Yep. It's likely we're going to get another quarter points. In fact, markets have priced that in. Anything outside of that, markets will readjust again. Just understand that if I can give you anything to take away from this. Of course, this is the schedule of relief for the consumer price. This is what we have today. And tomorrow, of course, we've got the non-farm payroll. This is going to be really about the dollar, in my opinion, the USD crosses. And go Team CRAMER. And we said with CRAMER, I would not give this guy my money to invest. But a broken clock is right at least twice a day. In fact, it is right twice a day. And ultimately, we thought this was his one. He's now got another somewhere down the line, I'm sure. So that's really all I've got for you guys. I can't emphasize, we're really trying to do something real here in terms of there's so much stuff I can get into. I'm still currently away. When I get back, it's game over, because there's so much that we're going to start introducing and doing and looking at, and really sort of separate ourselves from the herd, and start to show you the sort of lack of caliber of the other individuals out there in a nice way. But that's all I've got for you in this video, guys. If you've enjoyed this content, a like is always greatly appreciated. So is a comment. Well worth subscribing to this channel. We do daily cryptocurrency market updates, even when I'm away. We will keep you up to date on everything. We've got some fantastic guests coming on the show next week, the week after, and so on and so forth. We're doing a lot more interviews. We had Derek Yu from Moonbeam on yesterday. Well worth watching. You know, and so on and so forth. So that's all I've got for you in this video, guys. If you've enjoyed this content, a like is always appreciated. So is a comment. We do think ultimately that Bitcoin is going to continue to go up. There's going to be moderate pullbacks. And there may be a sort of larger pullback if we have something breaking, you know, what the yield curve is predicting, but we don't think that's going to be for a little while. All I've got for you guys. See you in the next one.